Hi, and welcome back to Small Caps. My name is Jess Fertig, and today we're catching up with Alex Scanlon, who is the Managing Director and CEO of Barton Gold. The ASX ticker code is BGD. Hi, Alex. It's so good to see you.
Hey Jess, good to see you again.
It's been a little while, but not that long. I think it's been a few months or 3 months, 3 or 4 months since the last time we caught up. And the last time we caught up, Alex, we talked about you growing the Tinkiller Stage 2 JORC resource to 1.6 million ounces of gold and 3.1 million ounces of silver. You confirmed material energy savings with your ongoing scoping study. You
hmm
completed some drilling. I think it was over 2,000 meters of drilling. And you also sort of spoke a little bit about how you're going to leverage your central Gawler mill for stage one operations. So there
hmm
was heaps of momentum there. I think a couple of months ago, the company reached 100 million market cap, which was a huge milestone
hmm
for the company. And you've continued to reach even more milestones, which we will delve straight into. Now, you've got 2.7 billion free cash estimate and a 70% IRR from the Tinkiller scoping study that you've just done. How are you positioning the project to attract institutional financing and strategic partners?
I think the project design is really key to that, and a lot of that comes down to the geometry of the resources. So one of the things that we really liked about this project is that it is a large scale bulk open pit body of mineralization. So you can target capital economies of scale both in your operating and capital costs. But right in the middle of this deposit, the main deposit's 3 kilometers long. There's a 300-meter long higher grade zone. So you have 80 to 100 meters of mineralization, but inside that you have 10 to 30 meters of mineralization that grades between 2 and 10 grams per ton. It increases the average grade. And what it means is the beginning of this project, we have what we call kind of our stage one and stage two starter pits. And those essentially accelerate forward a huge proportion of that $2.7 billion in free cash. So this is a study we put out at the beginning of May after we last spoke. And what it shows is the first stage of the starter pit generates $800 million in free cash in the first year. And then when you add the second stage, you're generating $1.3 billion in operating cash in 2.5 years. So it pays back the project 3 times over in 2.5 years. And that model of accelerating that cash flow makes it very attractive to financiers.
Yeah, that's so interesting, Alex. So those starter pits at Tinkiller, okay, so you mentioned are forecast to generate 1.3 billion in 2.5 years. How
Mhm.
confident are you in that resource conversion? And what's the next step, do you think, in terms of de-risking that project?
So we're pretty confident in those figures. We have a habit of being fairly conservative in how we model things. In a manner of speaking, we model for production, not for promotion. So we intend to take this material out of the ground. So the last thing you want to do is overstate and underperform.
Hmm.
What we are doing, though, to essentially generate the financial assurance from a corporate and project finance side is we are going to be accelerating now and bringing forward the JORC resource upgrade drilling. So that material is is in indicated and inferred.
Hmm.
We have about a 25,000 meter drilling program that we're starting in September, and that will take all of that stage one and stage two starter pits
Okay.
and move those to measured and indicated. So it will really underwrite the confidence in that, and that will bring it to a level of financial assurance. That means that we can bring forward financing conversations to a much earlier stage than one might typically do in a project development cycle like this.
Mm. And you've identified a fast-tracked sort of opportunity with the stage one operations at the Central Gawler Mill, as you've just mentioned. What's the
Mm.
expected CapEx profile and timeline to first production?
So this is now we sort of go from Tunkilia in the southeast up to our existing Central Golden Mill in the northwest. So we're 200 kilometers to the northwest, and that's something we haven't been talking about a lot. As we've been very focused on building up that scale destination. So we're now going back to that project area. Yesterday, we announced a 223,000 ounce resource sitting right at the mill. So this is a combination of historical high grade open pit mines a little bit of the historical underground. We've actually haven't estimated the underground there. So there's an underground mine that we can access, but we also have some interesting tailings there. So we have some high grade tailings.
Mm.
So when we think about that mill, then what the mill represents is a very strong leverage point for Barton Gold investors. The mill is fully permitted, it's fully constructed. We would do some refurbishments and essentially redesign of the mill to suit that material that we want to put through first. So we haven't determined exactly what the capital cost is yet. My guess is that we're looking at anywhere in the range of 15 to 20 or 25 million Australian dollars, depending on precisely what we want to do and how we want to optimize it. And that is really going to come down to a question of how much risk do we want to take to transition into operations? Because we already have the mill, we already have the permitting, we already have an EPA license, we have proven logistics, proven metallurgy, proven infrastructure. The size of the prize, so to speak, going from pre-operations to operations is so significant. It really comes down to a question of what's the easiest, lowest impact, lowest risk way that you can start that mill. And then that's how you're going to design that mill, make that transition. In a manner of speaking, take no risk that you don't need to take, and then start moving in higher grade material. So we're working on some initial studies now, and then we're going to be moving into full feasibility studies that will be informed by those costings. But my guess is in that range of 15 to 25 million Australian.
It's so interesting, Alex. Barton Gold is really has such a strategic kind of advantage in terms of having that infrastructure already set up, and having your whole portfolio, which we're going to continue to discuss. So on that, so the Tolmer's silver discovery, which you've announced, is being described as quite globally significant, with assays due soon, I believe. What are the commercial implications for Barton if those grades are confirmed?
So Tolmer is really interesting, and the silver discovery is a bit of a wild card. So the Tolmer sits within our broader Tarcoola project, and this sits between Central Gawler Mill in the northwest and where we'll have our second mill at Tunkillia in the southeast. So start stage one, generate cash flow, fund the development of stage two, and then you have two operating mills. And Tarcoola is sort of right here in the middle. So Tarcoola is historically a high-grade gold field, and so the idea there is finding shallow, high-grade near-surface gold that can go either to our existing Central Gawler Mill or blend into Tunkillia and lower the AISC, lower the operating costs, or increase the production. Tarcoola becomes a very interesting source of blending mineralization. The Tolmer discovery is quite interesting because again, this is an historical high-grade gold field. There's a 130-year history of high-grade gold production. Never in any of the literature have I seen the word silver. And we drilled this Tolmer target as a high-priority gold target. We announced a gold discovery there last year. We drilled it a couple more times, and then we went back and did multi-element testing to see if we could use geochemistry to predict where vein structures were going. And that's when we found actually very high grade silver with the high grade gold. So grades of up to 300 grams silver with up to 80 grams gold.
Wow.
So that was unusual. We then stepped 500 meters to the west and drilled another target there. And the first hole was 17,600 gram per ton silver. So that was, a global top 10 silver intersection for the first quarter of 2025. We then did some more drilling. We announced a couple more top 10 silver hits, but these are all in one line. So we have a sheet of paper thick geological knowledge right now. We have two dimensions. What it shows us, though, is there is a broad body of high-grade silver mineralization in the oxide zone, and it's hosted in a sort of a lead halo. Now, if that goes to the north and to the south, and we've just 2 weeks ago completed nearly 3,000 meters of drilling to drill to the north, to south, the east, and to the west. If that turns into a 3D body of mineralization, it may prove to be one of Australia's highest grade silver deposits just in the oxide sequence, right? So just open pit oxide, dig it up, concentrate it somehow, and ship it directly to port. So that could have a really significant benefit for us. But kind of one of the more interesting questions is, well, this silver is so unusual. The reason this is so interesting is actually that it's so unusual, so unique in this gold field. What has actually created this silver? What has created this deposit? If lead is an exploration vector for silver, is silver actually an exploration vector for a bigger, gold event underneath it? So hopefully what it means is we have a high grade economic silver deposit as overburden that we're removing and selling to get to some kind of structurally hosted high grade gold silver deposit underneath. And if that's the case, well, that is something that again could blend into both of our mills over time and really kind of supercharge the strength of our position in the region. So it's very exciting, but that's sort of like that's the limit of what it is right now. We won't know until we get these assays back. Sort of from the second half of July, we should have a much better idea of what we're looking at. So
Sounds so exciting, Alex. And it's almost like all the hallmarks are there for this to have a major discovery. So hopefully your drilling comes in and it's as exciting as what we're all sort of hoping it to be. Now, you've also just recently made an acquisition, so the Wadena project. Can you tell us a little bit more about that?
yeah, so we had a really big day yesterday. Yeah, so yesterday morning we announced the resource upgrade at our Central Golden Mill. So that was 223,000 ounces. And then after market, we signed a deal to acquire the Wadena Gold project. And so this is a project that's located about 200 kilometers southeast of Tunkillia. So the transaction is subject to approval of Cobra's shareholders.
Hmm.
So obviously we hope that they are as excited to be part of Barton's platform as we are. But what that would do is it would extend our sort of footprint from 200 kilometers between the Central Gawler Mill down to Tunkillia and another 200 kilometers down to Wadena.
Wow.
Wadena is a really interesting project. It's been around a long time. It's comprised of 4 deposits and it's got about 279,000 ounces of gold in it. It is much closer to the water, but it's also close to existing road infrastructure. So this presents a very interesting opportunity for us to look at developing this and creating, again, infrastructure that can be shared regionally in terms of other developers in the area. There are other high-grade silver developers, other high-grade gold developers. It gives us the ability to extend our lead and take that lead in developing common use infrastructure or infrastructure that can benefit multiple projects. And the material itself presents a very interesting opportunity. We have sort of broken cover and demonstrated last year our ability to produce and market very efficiently high-grade concentrates, which is not something you typically see done in the junior explorer sector. And that comes more from our sort of private market disciplines that many of our team bring into Barton as a public company. With Wadena and the development of that asset, it presents a really interesting opportunity to concentrate that material on a more capital efficient basis, and then look at using it, in the immediate region of that project in partnership with other people who are in the region and shared infrastructure, or send it to port and just send it directly to a refiner offshore or sell it to an offshore concentrate purchaser, or truck it up to Tunkillia, blend it into Tunkillia and create more of these stage 1 and stage 2 starter pit style economics, where we are pushing the average production from 120,000 ounces per annum up to 150 or 180,000 ounces per annum. So there is a lot of optionality in this asset for us.
That's so interesting, Alex. And sort of I'm asking the question, why wouldn't you want to truck it up to your own mill? Surely that would kind of, bring costs down, or I mean, there's just so many strategic options with this, or you could get a strategic in, I suppose.
Yeah, so I mean, it will come down to a pretty detailed analysis, and in many respects, the analysis there will come down to logistics costs
Yeah.
and payment terms on concentrates.
Yeah.
So we have worked with our trading partners to get very, very strong terms for us on concentrates. It will come then to a question of what grade of concentrate you're producing, because that will dictate how tightly you can price the payable price relative to the contained gold value. Now, as the payable value drops, essentially the intrinsic value or the preference to trucking goes up, and you would actually just truck a high grade concentrate and put it in Tunkilia. And to be fair, it's a very logical question. Like,
Mm.
why would you not just leverage the existing infrastructure? There's a very strong incentive for us to do that because we will have a 4 or 5 million ton per annum plant there. We will have very efficient leaching circuits in place. But equally, there may be some interesting opportunities to just direct ship a very high grade concentrate where you could actually get paid more than you would net sending it to port than you would trucking it all the way to your own mill. So it may be something that some months you do A and some months you do B.
Yeah, no, that makes sense, Alex. And I guess also the strategy would be to make that mill very full with all of the other resources that you're going to find and discover further north, as you've just mentioned.
Correct.
Yeah, very exciting. Congratulations on that. Now, talking about
Thank you.
financing, so the company just completed a $3 million placement at a 25% premium, which is absolutely unheard of in this market. We know we've been in a very depressed market. I know gold is at all-time highs, but for juniors trying to raise money, it's been very, very challenging out there. But Barton has done it. Alex has done it. What has the investor appetite been like that you've noticed, Alex, given you've just raised this money? And how are you going to use the capital that you've raised, the 3 million, to drive near-term catalysts for the business?
So I think generally looking across the market, investor appetite is returning to the gold sector. And this is something that we've spoken about this before. And, I think all of us in the market have opined about this. There's been a lot of conversation about people being negative about gold for the past 3 years. And the reality is that nobody was negative about gold. People just weren't interested in gold because there were too many other exciting things going on. And you could, go on margin and buy an S&P 500 index tracker and look like the world's best investor. So people were doing that. We've entered a world now where there's greater volatility and greater uncertainty around geopolitical events and tariff conflict and trade friction and immigration problems and all these things. So there is a natural drive back towards other assets that are sort of perceived as risk diversification and hedges to these types of things. So that I think is bringing interest back to gold, along with a lot of central bank buying. In terms of Barton's position, I think we are a focal beneficiary of that. Every time we have seen a marginal increase in interest in gold, we have seen a huge increase in investment in Barton securities. And I think what that really reflects is, and we've seen this for the past 3 years as well, basically a very strong consolidation of our register into the hands of institutional and high net wealth investors who are following essentially one very strong board and management alignment. So our board of management owns somewhere around 25% of Barton Gold. So we are the sort of pinnacle example of the sort of principal agent alignment instead of the principal agent dilemma.
Yeah.
We are very, very efficient with our capital. We do all these asset monetization programs. We've generated $12 or $13 million in free cash internally. So we don't have to go to market and dilute. So that's driven a very, very strong support for our securities, but it's also generated very strong demand for any issuance that we do. And so I think we're in the fortunate position where we've done the really hard work. And we've been very creative and managed to protect and preserve value for our existing shareholders while generating future value in the projects. And we had very strong demand for the placement. We ended up placing a 25% discount to our 10-day VWAP, which is about a 4% discount to our immediate prior day close. But that really reflected that was some of our existing investors who'd been asking to increase their investment over and above what they could access in the actual share market without driving the price much, much higher. And then also we were very pleased to welcome to our register some new investors who've actually been waiting for 2 years to get a placement. So we have actually quite a long wait list because that $3 million brings to just under, we've only placed $13 million in the last 4 years. So we're not a large issuer of securities, and we're in a position where we've performed very well. We've protected people's interest. We've put ourselves in the pathway for success. We're sort of on the front of this rising gold wave. And yeah, it's been great for us. And the use of the capital is really that capital is dedicated to accelerating this sort of higher grade central zone drilling at Tunkilia, which will then underwrite and accelerate or bring forward sort of the earlier financing conversations, so that as we're turning stage one on during 2026, we hope we are also accelerating planning to develop our stage two, and that's going to involve applying for our mining lease application before the end of 2026, and hopefully having some of these financing conversations advanced and sort of in place and ready to go for when we publish our feasibility studies, so we can just go into execution.
So interesting, Alex. And I think the share price performance has been real validation to all of the things that you've just mentioned. You know, you've got a tightly held register, you've got institutional support. You've been very clever in terms of your strategy. It's a dual strategy of, generating cash flow, reinvesting it into exploration, acquisitions, and really building, that very strong foundation for shareholder wealth, which is really exciting and quite unique, I think, on this end of the market. So huge kudos to you. We've had, or we've, I'm now talking like I'm part of the company because I feel like I've been part of the journey with you, Alex, for the last couple of years. But you've had a 3 times share price run this year. What do you see as the key value drivers that could continue this momentum through
Mm.
the second half of this year?
Yeah, look, I think relative to many of our peers in the market, on any comparable basis, we still trade at a discount. So there's a little bit of a recognition factor here, and we're actually kind of in the front end of that awareness curve. So it's been very rewarding for us, and a nice sort of market pat on the back saying, okay, you guys have done a good job, and we are starting to recognize that. So that's kind of like a big relief for us, right? It feels nice.
Absolutely.
But if you look at Barton Gold relative to many of its most like peers in Western Australia, where many of the gold gold investors are very highly engaged, they're very aware of what's in their backyard, so to speak. We still trade at a considerable discount to our most like peers, like Oz Gold and Astral. So there's a lot of potential for us, and I think in terms of keeping the momentum going, there's sort of 3 key aspects that, again, these things were baked 5 years ago in the plan. They were set in motion 3 years ago, and we're just starting to see them, firm up now. But we've defined this large scale stage 2 platform. Now, this means we have a destination of institutional scale. We are not aiming to produce 100, we're not aiming to produce 50,000 ounces. We're aiming to produce 150,000 ounces. So we've got a real target destination here that people can look forward to, above and beyond a small scale startup. But now we also have this stage 1 asset. And so instead of representing just a small scale, although very advantaged startup at targeting 20, 30, 40, 50,000 ounces, this is actually a stepping stone to this. So this makes this very attractive, and this makes this very real. And the third thing is, in the middle, we are continuing to do all of our exploration work. So right in the middle, we have this Tolmer discovery, regional M&A. We are going to continue to build and unlock value on a very capital efficient basis. Our objective is to transition into stage 1 operations by the end of 2026, to submit our mining lease application for Tunkilia by the end of 2026. And hopefully we are announcing a final investment decision and construction towards the end of 2028, early 2029. And by 2030, we are a 150,000 ounce or beyond per annum producer.
Unreal, Alex. So plenty of catalysts, and a long-term strategy, as you said. I mean, this is patient capital. This was set in motion 5 years ago, as you said, and you have to kind of ride through the cycles of commodity prices. And now you're reaping the rewards and the tailwinds of the gold price. But all of those foundational blocks were laid, as you mentioned, 5 years ago. Now, Alex, with multiple assets you're advancing in parallel, we've just spoken about, how are you prioritizing the capital allocation across, say, Central Gawler, Tunkilia, Tolmer, your new acquisition, to sort of maximize long-term shareholder returns?
Yeah, so the idea, of course, is continue to use your capital very efficiently. Like rule number one, right? Raise it sparingly and use it efficiently. And rule number two for us is use our assets to fund themselves or co-fund themselves. So we've been doing that to date with our asset monetization programs. And that's been about 12 or 13 million dollars. By moving our stage one operation or stage one platform into operations using our central Galway mill, like we can get to cash flowing production not by spending 2 to 3 years and 2 to 300 million dollars,
Mm.
but by spending 20 to 30 million dollars, perhaps, right? So that transition is really important because this then funds this, and it sort of becomes a cascading effect. And the idea really is if we're trying to get to this end objective, and if we can use this to then go here and here and here, it means we don't need $400 million to reach our target. It means we're going to invest 20 to 30 million dollars and start self-funding. And
Mm.
that really is how we take this step cheaply, low risk, low cost, low dilution, and preserve this value for shareholders that's here
Mm.
by needing to raise much less money here.
Yeah, and so important that non-dilutionary aspect to your strategy of assets funding assets, and kind of that feedback loop, which is so unique and interesting, and really places Barton at quite an interesting advantage, in this market.
Mm-hmm.
Now, Alex, we've had a long chat, and I'm just really grateful that you're here. I'm grateful to hear, always, as always, to have a chat with you, and to hear how well Barton is doing, and the hard work that you continue to do. I just
Mm-hmm.
have one last question, as always, and that is just two or three key investment highlights as to why investors should have Barton Gold on their stock watch list.
I think first, when we touched upon momentum, that is not something that is not generated by accident. So we are going to keep moving through this trajectory. It's a good time to be looking at what we're doing and jumping on board a team that is now a 4 or 5 year public track record of showing you that we do everything we say we're going to do. We do it faster, better, cheaper, and we generate a lot of value. So that's a really good reason to look at that. Two, we are looking at a low cost, low risk transition into operations. So, people all have different ways about valuing a company as it becomes an operator, but we are a long way from the types of valuations that you would see traditionally when you reach that stage. And what it costs us to kind of cross that drawbridge is relatively small. So there's real potential there. And then there's that blue sky element. We are continuing to invest in regional exploration. Tolmer is a classic example of the long-term beneficial outcomes of just really rigorous geological and geotechnical work. We have just made that discovery. We have got a lot of drilling results coming out shortly on that. We are already mobilizing a diamond rig and another RC rig to go back. And we're going to be drilling for 3 to 4 months upgrading Tonkilia. So there's basically going to be 6 months of nonstop drilling news flow, which pair that with our momentum and a market that seems to really be behind us. It's probably a good time to have a look.
Yeah, absolutely. Wonderful, Alex. As always, such a pleasure to catch up with you. Thank you for your time today, and look forward to catching up again and having some more news on everything that you're doing. So thank you so much.